Let's start off with that net subscriber number. The guidance is a bit higher. They guided that it would be similar to Q2, about 5.89 million, but the estimates are coming in lower. What are you expecting when it comes to net subscriber adds? What's your rating? What's your price target?
Yeah, we're buy rated on Netflix, and our target is 500 a share. We are a bit nervous, I would say, about this earnings report. Not so much about what they're going to report in the third quarter. It's more about the guidance they're going to give for the fourth quarter. And so our view is we sort of need to have a clearing event on the stock and get sell-side estimates lower before we can get back to the long-term positive story around their ad tier.
All right, so $500 price target. Still, you see a pretty big upside to the stock. I want to ask about that average revenue per user. So the stock's taken a big slide since an investor conference. Executives said they believe that average revenue per user is under a lot of pressure because all the growth's coming from outside the U.S. For example, when you look at Asia, users pay almost half or about half of what they pay here in the U.S. How does Netflix address this issue? And this stock is certainly one that tends to trade on this idea that they're making money per user.
Yeah, I don't think the mix shift is necessarily a big negative, but what they do need is a counter narrative to sort of allow the average revenue per user to move in the right direction. And where folks rightly had hung their hopes was on Netflix's ad tier, because in total, if you have a lower subscription price plus a lot of ad dollars, you can get more aggregate revenue than you would under the old ad-free model. Investor sentiment is a little bit dented on that because they fired the head of their ad unit, who's only been there about a year. And so people know things are not going as well on the ad tier as they hope. I think the ad tier is going to be fine in the long run, but that's what we need to see. We need to see more progress on the ad tier to get the ARPUs up.
So seeing a lot of reports that Netflix is planning to raise prices after the actors' strike is over. What do you think about these reports? What are your thoughts? And does raising price, does that put pressure on subscriber ads, or does it just generate more revenue?
Well, the good news is everyone in the industry on the streaming side is taking pricing up. And that's a good thing because everyone except Netflix is losing money in this industry. So getting pricing up is good. What I would say is that all of these apps are so much cheaper than linear television that I think, at least in Western markets, there's scope to take pricing up, probably a bit more difficult in international markets.
All right. Any other storyline in this report that investors should pay attention to? And we have to keep a note and note for our viewers. Netflix can be one of the most volatile stocks after earning when it comes to mega cap. You're laughing. It's important to know. I don't think everybody knows that. We kind of know it here at CNBC, and I know you know it as an analyst, but it can be a very volatile stock, and it's obviously a big market mover, pretty big weighting in the S&P and the NASDAQ 100. Yeah,
I think the options market is implying about a 7% move on the earnings. So you're right to point out the volatility, Frank.
So, I mean, what are your thoughts? Anything else that we should be looking for? Because when it comes to a stock this volatile, it seems like average revenue per user is a big metric, but there's a lot of other things that may cause this stock to move.
Yeah, I think it's going to be forward commentary. I think that's going to be the main thing. If they walk back sort of expectations on the ad tier, that'll be bad. But if they tell a good story about what the future holds for the ad tier, I think the stock will be okay.